My colleague Kate Dore and I have been covering Trump accounts since the big beautiful bill passed last summer. While the concept behind these investment accounts is pretty straightforward, we still have a bunch of unanswered questions. I'm going to break down where our research has gotten us so far and what we still don't know. When will Trump accounts open, and when can eligible families expect to see the seed money? This is a simple question, but the answer is a little more complicated than we expected. Once parents or guardians set up an account, there will be this authentication process, which is expected to begin sometime in May. And then the $1,000 pilot contribution from the federal government is expected to arrive on July 4th. There could be additional deposits that come from charitable organizations or local governments that happen around the same time. Maybe. The administration even suggested that following Connecticut's lead, all 50 states may offer some additional funding into the Trump accounts of eligible children. But those announcements are still TBD. Several employers have said that they will match the Treasury's seed money, but the timing of those contributions is also a little unclear. Only about 62% of Americans own stocks, so many families continually miss out on wealth-building opportunities. This aims to change that.
The goal behind Trump accounts is pretty straightforward, which is to bring everybody into the upside of the American economic engine.
Monday, July 6th will be the first day that money from Trump accounts is invested in the stock market.
Treasury Secretary Scott Bessent on Friday announced that they're approaching 2 million forms filed for Trump accounts, which represents accounts for about 3 million kids.
We talked to market researchers about how that inflow could impact the market and found that even with high participation rates, that cash injection is unlikely to move the needle much this summer.
Even if all the accounts were pre-funded and transacted, on the same trading day, it would still represent a relatively modest percentage of the overall trading volume of index funds, much less the overall market as a whole. So we do not anticipate a meaningful short-term market impact. Of course, long-term, the more Americans that understand the markets, the more Americans that are investing intelligently in sort of long-term, equities, we hope that will be beneficial to our economy as a whole.
Kate had a lot of interesting reporting on the tax implications for families.
One of the tricky things about Trump accounts is families are going to need to keep track of pre-tax and after-tax contributions. And that could be difficult for families, say, over an 18-year period from when a baby's born up until when the child gets control of the account at age 18, and then from 18 on. Otherwise, when they take money out, they could pay taxes on the entire withdrawal. So it's almost like you're paying taxes twice. If you had a direct parent contribution, that's after taxes. If you took that contribution out, there wouldn't be taxes on it, but the growth of that money would be taxed. And then the $1,000 seed money from the Treasury, that's considered pre-tax, so that's not included in your income in the year that you receive it. But the gift itself and the money will grow tax deferred, so you will owe regular income taxes on that amount. The same goes for employer contributions and other qualified contributions that could include philanthropic gifts. I think it's important to keep in mind that Trump accounts, similar to your 401k or your regular IRA, you should know that that money isn't 100% yours to keep. You should always consider that it's going to depend on your tax bracket when you take the money out. So you're not going to have that full amount. And the other thing to consider is that when you take money out, that's going to increase your adjusted gross income for that year, which could trigger other tax consequences. Family members like grandparents can make yearly gifts under a certain amount without triggering the need to file a gift tax return. The issue is whether or not they're going to need to file that gift tax return from a contribution that they made to a Trump account. And the reason why there's confusion about this is because in order to qualify for that annual exclusion, that $19,000, the gifts must be present interest, which means that the recipient can access and use the gift immediately to qualify for that exclusion. And some experts are saying that Trump account gifts aren't present interest and therefore wouldn't be eligible for the annual exclusion and therefore could need to file a gift tax return even for small gifts to, say, a grandkid's account.
We're still waiting to hear who will be the custodian for these accounts and what impact this investment will have on the deficit.
There is an upfront cost. It's relatively small on the scale of our overall national budget, particularly when one factors in the impacts that it will have on lower and middle-class families in this country. But that even if it's just about the dollars and cents, when you sort of take off our analytical filters of the congressional budgeting process and go to more of a P&L perspective of like what is actually going to be the lifetime return of these accounts, it's our view that they'll actually be in the black and revenue generating for the government.